Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Wednesday, April 9th. We're going to take a look at SPY today and try to get a sense of at what levels might SPY get to that would place it at modestly undervalued to modestly overvalued, or that sweet spot in between, which is sort of fair value, per the Buffett indicator. Now, you can look up the Buffett indicator if you want more information on it, if you want to do a deep dive, but the general sense is taking the cumulative market cap of a country's publicly traded stocks as a ratio to its GDP. So if the value of publicly traded stocks are way, way, way higher than the country's total GDP, it's considered overvalued. If it's on par or a bit under, it can be considered modestly undervalued or on par. And I wanted some historical references here. Now, I will say I did plan to make this video before today's chaotic event. Today's chaotic event, right? The daily chaotic event. And so I could have pivoted, but I thought to myself, you know what? I don't think that we've seen the end of this. And let me just say why. I started to put out stock market correction videos on March 3rd. And at that point I said, I've been thinking about this for a few weeks. The main reason I was thinking about it was the chart and also the Buffett indicator was extremely overvalued. It was something like 177, 187%, something like that. And it was way overvalued. And we know that Buffett had pulled out, had sold a bunch of stocks, and was sitting on a lot of cash. And so I think regardless of all of this chaos around tariffs and allies and friends and foes and whatnot, I think that a correction was going to happen no matter what. Now, adding fuel to that fire and in inducing a chaotic environment through uncertainty will only exacerbate it, right? That's where you can get into real crisis territory as opposed to just correction territory. And I don't think that today's good news, even though SPY was up over 10%, I said a few videos ago when we had that fake news that set off that huge jump in the middle of the day a couple days ago, where at that point they said essentially the news that came out today, but then the White House came out and said that it was wrong, right? On that day, after that, I said, look, it gives you every indication that the market wants to fly, right? Everyone is looking to time the exact bottom here, jump on the good news, and just push the market up. And that's what we saw today for sure. Do I think this is lasting? Not really. For one, we'll talk about the levels that still exist on the Buffett indicator. And two, I still think we're in a tremendously chaotic environment. And the fact that the president can just go post something on a social media site and have that swing the markets so chaotically, for lack of a better term, it's not a great stable environment to be in, and the market wants stability. And so being overvalued, being very top heavy on the chart, and then being in an environment where leadership or administration is very willing to introduce chaos and uncertainty, I think there's more pain to come. I'll just say that. I don't think we've seen the bottom of this correction yet. So let's get into the numbers. What I wanted to do was to take a look at the Buffett indicator as the .com crash kicked off and the Buffett indicator when it bottomed out. And then the same thing for the 2008 financial crisis, the Great Recession. Where was the Buffett indicator when it kicked off and where did it end up? What was the bottom? And then see where we are today and compare those things. So this is where I took September of 2000, the kickoff of the .com bust, 146%. So into overvalued territory on the Buffett indicator. I believe there's some variations out there. I think above like 115 or so is considered overvalued, like very overvalued. And like, 90 to 115 is like on par or moderately overvalued. So 146, quite high. And the S&P then lost nearly 50% from peak to trough. And by the time it did get to the bottom of that dot-com bust, the Buffett indicator was down to 79%. So right into that very, very sweet spot of modestly undervalued. And then you saw the recovery start to take place. Now, this is just one component, right? Had there been additional craziness, additional chaos, additional news catalysts, crises that were emerging throughout this period, this is the monthly chart, by the way, then would that have been the bottom just because it was at 79% on the Buffett indicator? I don't think so. But this gives you a sense of how nice it can be to have a sense of where you are on the overall market cap of publicly traded stocks as a ratio to GDP. Once it got into that sweet spot, 79, it found a bottom and showed a pretty lengthy recovery until the Great Recession kicked off. Here I pin it at November of 2007. It was now, because it had gone through such craziness, and GDP had grown through this period, it had only gotten up to 105. So stock market moderately overvalued at that time, right? So nothing like tremendously overvalued, like 146 with the dot-com boom kicking off, or bust kicking off. That's much, much more overvalued, right? 146. 105, moderate, but there were a lot of financial institutions that were failing. There were a lot of schemes that unraveled, and the global finances started to melt down. And there was a whole slew of reactions to that. And so what started as a financial thing then just melted down due to additional poor management and crises upon crises. But the Buffett indicator, while being mildly or modestly overvalued, it wasn't in crazy territory. But this melted it down all the way to 56.8%. So significantly undervalued. At that time, things had started to stabilize. The too big to fails got bailed out, and things started to recover. And that brings us all the way to today. Look at us go. Look at us go. Look at us go. As of today, literally April 9th. And please be aware, I took these numbers this morning. I don't remember exactly what time. It was probably around 11 a.m. Eastern time. And at that point, the stock market was at 166.7%. And here I made a note of, by one standard, exceeding 159% indicates significant overvaluation. So think of how much overvalued we were here at 611, right? And just realize at this point, we are higher than 166.7 because we jumped 10% today. At the time I took this, we were probably relatively flat or a little green, a little red. I don't exactly recall. But, we're still in significantly overvalued territory. And per the dot-com numbers, 146, I mean, even after the big corrections that we've seen, again, this is the monthly chart. And so, knowing the pain that has already been, the pullbacks that have already happened throughout the year so far, for us to still be well into significantly overvalued territory and still 20 percentage points or more higher than what kicked off the dot-com bubble burst, take that for what you will. But I think that's why I say I think that there's more correction to be had here, and add on top of that whatever additional drawdown you want to wager will happen because of uncertainty and chaos that is presented or inflicted into the markets on top of a standard corrective phase. So 166.7, for the market to be considered moderately overvalued based on the Buffett indicator within the 100 to 140% range, right? So moderately overvalued. The SPY price would need to fall to between approximately 296 to 415. So big range there, but the big range is 100 to 140, right? So it is a big range. But you're basically looking at like 300 to a bit over 400 to get it still to moderately overvalued territory. You should quadruple check my math on this. If you are doing anything more than just watching this video for informational or entertainment purposes, because I am not a math scholar. So just keep that in mind. I do my best. I try not to make errors, but it could certainly happen. With today's SPY price at $4.95, so that's when I took it, right? I took this at $4.95 this morning, and we're at $5.48 now. So that's what I'm talking about. And the Buffett indicator currently at 166.7. To bring the Buffett indicator within the 80 to 100% range, right? That's more the sweet spot of where you'd want it. The SPY price would need to be between 237 and 296. So that would be sub 300. And that would get you into what would be considered sort of modestly undervalued to on par. Great deals at that range. Again, great deals based on the Buffett indicator, probably at that point based on the chart, but still the big looming wild card would be what's happening globally, right? What's happening that is accelerating or is adding to SPY getting down toward or even through the $300 level. And, does that press it even further? Because the market's not just going to do something magical because it gets into a certain Buffett indicator range, but it is a good data point. That's why I wanted to look back at it historically and see where on those previous crises things landed. So yeah, if there is some sort of generalized push, so just pretend that nothing major is happening news-wise. I know that's extremely unlikely, but just pretend like that. Everything else is on balance or on par. If there were to be a sense in the market of this significantly overvalued nature of things, and things were to draw down more toward maybe just modestly overvalued or to on par, you're looking at probably something high 200 or maybe mid 200s to 400, right? So big range there, but we're talking about a big range. But I mean, no matter what, those are all significantly further away from where we see things today. Of interest, we're talking about a lot of things around the 300 range. As of now, the 183 EMA rate here on the monthly sits at $300.16. So take that for what you will. Now, I know you're going to want to ride the good news of today as long as it lasts. I don't have a huge want for things to end up at $300, for SPY to end up at $300. It would hurt me just like it would hurt everybody else. I just thought it was an interesting study to see how things compare here. Maybe give folks something to think about that's not just Wall Street bets, money printer go brrr, and stonks only go up, right? So as adding a different voice to that, I thought that I would put this out there for that reason. So we'll see what happens. But again, if I'm wrong and there isn't a broader correction to be had, for one, I will be surprised, and it'll be interesting to figure out why. And two, it would be beneficial to everyone. So I don't necessarily want to see it happen. I just I'm presenting the reasons why I think that it seems very, very likely to be the case, no matter what president is sitting in the office or what administration is in control. Again, the wild card there is what those administrations or those people would do to add fuel to the crisis or to help stabilize things in the crisis. All right, folks, so I hope that you had a happy hump day. And as always, I appreciate you watching, and I will see you in the next video.